He's basically doing a thing which professors said is very tricky, and you have to select one company out of 10 companies. So basically Jon is mining, and also a CEO and a major shareholder for Gexco, which is listed in Nordic exchange. And I will now wait for light to come back and give the word over to our second speaker, Jon Fangel from Gexco.
Thank you very much. I'm very pleased to be here and very proud as well, because this is, let's say, a special topic for being from the mining sector, or the mining exploration sector. So I would like to point out my viewpoints on the investment in gold, and also especially highlight a little bit of the difficulties and the tricks that could be helpful for investing also in gold-related stocks, in producing companies and in prospecting companies. So first, I start with a little bit of history about Gexco. The background is a small Norwegian mining company or exploration company called Vindal Gruver that was founded in 1988. And I'm the third generation of Norwegian gold miners. So my grandfather, he mined for gold and zinc and lead and copper in northern Norway, and my father did the same. So as a heritage from my grandfather, we had a small project in the family called Vindal Gruver. We started together with an Australian company, but they ran out of cash when the gold price went down. So we decided let's try to do this ourselves. That was in 2002. In 2004, we were acquired by a small junior exploration company who had some other business activities as well. And we got listed. And we felt that this was quite early, but then something happened, or continued to happen, with the gold price, which means that the timing was perfect for us, which meant that we will have access to, risk-able capital. After running on just a small scale gold deposit in northern Norway, we decided in 2006 to form a new strategy for the company, which meant get big or get out. I'm going to get back to that a little bit later. And in 2007, we acquired a zinc, lead, copper, gold, and silver deposit in northern Norway, in Mo i Rana area. We believe quite strongly that you should have a decent or excellent team to be able to do that. What we're trying to do is we're trying to open a mine, and to be able to do that, you cannot do that with, let's say, 3 consultants and a retired professor. You need business professionals. So our team at the moment is 9 professionals. We have some people with MBAs. We have some PhD. We have a qualified person according to the Swedish regulation or reporting standards. And we have several Masters of Science. And totally we're now 25 people on the payroll. So we try to do everything that we do ourselves, which means that we drill ourselves, we explore ourselves, and we do our own reporting. And the main reason for this is we need to have control of the risk factors. So we're running as much as we can indoor and in-house. We use experts from all over the world as well, but we think that it's very important that you have your own team. The Gexco share is listed on the NGM list in Stockholm. It's a regulated market, which means that we are able to trade a share with the new rules in any market in Europe, basically. But there is a quite big difference between a regulated market and an unregulated market, and we're quite happy to be on the regulated market. We have a total of 895 million shares outstanding, 5,200 shareholders, and the market cap is about 150 million Swedish kronor. We brought in some money in November 2006, 28 million. And just a few days later, I met with Martin Ivert, who is, at that time was the head of LKAB, one of the largest Swedish or Europe's largest iron ore miner. And he asked me, how is business doing, Jon? Well, it's great, we just raised 28 million. And he told me, that's more or less enough for one underground hauler in the Kiruna mine. So from a mining perspective, 28 million Swedish kronor is almost nothing. So that's when we formed the strategy, get big or get out. And we were able to raise some more money in July. Last year we raised 75 million. That's what we're running the company on now. And the cash asset as of January the 1st was about 43 million Swedish kronor, and burn rate is about 2 million a month, a little bit more at the moment. So this is Gexco. We have a gold deposit in Bindal in northern Norway. We have our operating office, that's where our team is based. In Stockholm, it's just me and Mikael, who's sitting over there, who is taking care of the financial part of the company. But the rest of the teams are all based in Norway, so we do some heavy travel into northern Norway. We know all the roads, all the airplanes. We have not checked the trains yet, but it's 1,030 kilometers. I know that. In the Mo i Rana area, we have what we call a smorgasbord, which means that we have a cluster of assets. Basically, it's massive sulfides. So we have copper, zinc, lead, gold and silver. One of the main assets is the old closed down Mofjället Gruvor, who still remains over for 2, 3, 4, 5 years operation. But we would like to find some more deposits in the area so we can build a large-scale plant to be able to address the ore from Bindal and from Mo i Rana, the Mofjället mine, and also the surroundings, which means that we form a business idea that is quite close to what Boliden is doing in the Boliden area, where they have one central unit and they're taking ore from different mines up to 100 kilometers away. Key strength, we think we have a unique exploration and mining know-how. We have been able to attract skilled people, which is very important. That's why we're based in Mo i Rana, because in Mo i Rana, that's a village or a town. You have a hotel, it's not that far away to the closest bar. You can have a beer when you finish your work, which you cannot find in Bindal area because that's very remote. That's a camp. So we think to be able to attract good geologists, good managers, we should be in an area where you have an infrastructure to live, where people want to buy houses. Because if they buy houses, they will stay in the company. That's basically how we look at it. And that is possible in Mo i Rana. That's why we see Mo i Rana as a very, let's say, strategic place to be. Main office in Stockholm, that's the main reason is because we listed here. There's also one big advantage is that Norway has been a mining country several years ago. But to find the know-how, you have two, well, say, world-class suppliers in Sweden. One is Sandvik and the other one is Atlas Copco. You have several huge mines running, Boliden, what is left of Lundin Mining, and LKAB, which means that you need a good contact inside also the Swedish mining industry that we can, let's say, move to Norway. Another reason is I love Stockholm, even if I'm born Norwegian. So, but this is not about Gexco, this is about gold as an investment. So I promised Ivar to not to, let's say, focus too much on Gexco, but I just wanted to give you, well, the picture, what is the background and, well, say, my findings in this area. I see it quite easily. This is not as, well, as the deep analysis as the previous speaker, but I think that you can invest in gold in 4 ways. Physical gold, like the one on the table, financial instrument linked to gold price, shares in producing gold companies, and shares in prospecting companies. So what's so special about shares in producing gold companies? My idea is that the value of such a company is very much linked to future cash flow, which means that it's not so much related to what you have in the ground or the asset you're managing. It's more related to how much cash you make. Boliden is right now, I think, it's traded at a PE ratio about around 6, 7, which means that if the metal prices are not dropping, it's one of the cheapest companies of the Swedish listed companies, which amazes me a little bit. If you look at a gold producing company, it means that if the gold price is going up, you have volatility, which means that the share price of a producing company will rise more. I've seen some figures 1.5 to 2 times the change of the gold price. But that is also very much affecting on what is the grade they're producing, what is the cash cost. Which means that if you're looking into producing share companies, you should have skills in this area. It's not easy to invest in, let's say, a mining company because it's very technical and complicated mathematics that is building up this cash flow. So also in, let's say, producing gold companies, you have technical risk and you have also political risk. And you have risk from different areas, you have risk on cost, a lot of things about that. So this is a picture that I borrowed from Magnus, he's sitting in the back from Raw Materials Group. And I think this is very important to point out a little bit of the mechanisms that is affecting a producing company. So this picture is showing the average cash cost per ounce, which means it's a rough estimate how much money they will make. They have the gold that they mine out and they have their cash cost. We will give them we could call it a gross profit. And it's independent of how much investment they have, the capital cost and things like that. So it's basically how much they can extract minus their cost for energy, labor, and other mining related costs. And this is the average cash cost for 2007. If you look at the average company, this is based on 1006. It's tons, it's about 1100 companies, something like that, I guess. So if you look at the average company, the average cash cost is a little bit less than $400 per ounce. Which means that if the gold price drops to about 500, all these companies will lose money. But they will not lose money for a long time, because to stop a mining operation you can do in, let's say, 2, 3, 4, 5 months. So if the gold price is dropping, half of the production will fall out. So it could be wiser to look at these companies because they're more stable. But then again, the risk-reward factor is far lower. This is a much more safe haven compared to these companies. If the gold price is rising, what will happen? A lot of, let's say, mining operation that is not on the scale here, they will come into production. Let's say low-grade mines will open up, which will increase the production. So in this area, you will have a high risk reward. And this is where, let's say, junior companies are acting. They might pop up here because you have, well, a good deposit are still found. But it is this area that you should focus on if you look at prospecting companies that are not in production that's still looking for gold. One other effect that is quite interesting, that the average production cost has been highly raised due to the fall of the dollar. Which means that I think that the figure for the last quarter is close to 500. So this is the average for 2007. And as energy and labor cost is going up, the production cost is going up. So I think we will see all this, everything else the same. We will see production cost average for maybe 2008, 550, maybe as high as 600. Which means that, let's say, low-grade deposit that you normally find in this area are coming into play. Because the price will go up, the gold price will go up as the production rate will go up. So, shares in prospecting gold companies. How do you find the company who is making 10 times or outperforming gold 10 times? It's important to realize that the value is linked to a gold asset. It's not a cash flow, it's an asset. It's gold dug down somewhere in the ground. And that is an asset that might be an asset today, and it might not be an asset tomorrow, or it could be extremely valuable asset tomorrow, as well as price costs are moving up and down. It's even more volatile than shares in producing companies, because you have the stock market risk. That is what happened to Gexco, to similar companies as Gexco, that we have been beaten quite a lot on the market pricing, because even if the gold price and the metal prices are rising, the price for risk is getting even higher. And it's very difficult to assess these risks. Some companies go bankruptcy. This is my idea how the market is working. And this is a very schematic plot for the market cap of a company compared to the value of the gold that they have in the ground. And if the figures are right, a junior company with, with high risk resources, they say they're not fully developed, will have a value somewhere between 5 and 15%. If you increase the potential, you make the mine twice as big, or you make the asset twice as big, the value of the company will double. But if you work to reduce the risk, and you will travel to make it more, the chance that you will really open a mine and get into a cash flow, you will have a factor of about 7, because the value of a junior company with proven reserves, or even a major company, is rising to 35 to 75%. So for me, it's quite easy when I manage Gexco, and also when I talk about investment, that you should find a company that's working with the risk, because it's paying off 7 times more if you're just increasing the potential. Several junior exploration companies will never come into production, because they can never finance and don't have the know-how to open and to run the mine. Which means that the best hope is that a major company will come and buy a junior company. But it's not happening that often. Since I started to work in this business, it happened once in Scandinavia, and that was Riddarhyttan, that was acquired by Agnico Eagle. And that was 5 years ago, 4 years ago, something like that. And there is, this year, they will probably open up the Kittilä mine in Finland, which is also showing a little bit about the time span. So, how do you focus on the investment risk for a prospecting company? You have to make sure that they have reliable geological data. And my key question is, if I'm looking into a new project, is, says who? It's not only that they have to be qualified, they have to be skilled, and they have to be reliable. Because it's very easy, if you run a company like Gexco or another junior company, that you boost your asset, you boost your probability to be able to open a mine. What you're doing, you print shares. And it is good for the company in the short term, it is very bad for the shareholders in the long run, which means that you will qualify into the 9 out of the 10 that will be successful. You need a realistic feasibility study. If you remember the old picture with the cash cost, the average cash cost. If you're looking into an open pit mine with less than 1 gram gold per ton, it's probably not going to happen with today's gold prices. Because the average, let's say, a good open pit mine are running at 1.8, 2, 2.2, 2.5, things like that. If you don't have a special condition, you have open pit mines running at as low as 0.6, 0.7 grams per ton, but they're actually digging gravel out of the ground. And also in the other end, if you're looking at a small scale gold mine, with a narrow vein mining, you need far higher grade to be able to achieve that. And if not, there is a risk, or you need, let's say, a much higher gold price than you have today, or that you might have in the future. Because even if a lot of people are very optimistic on the gold price, historically, prices are also falling down, which means that you need a crash scenario. Things can happen. Financial risk. If you're looking at the 1 billion Swedish kronor investment, who is going to pay for that? The bank? The bank who is also heavily invested in subprime loans in the United States? What bank is going to give you the loan? Or is it the shareholders? But if you have a 1 billion investment and you have a market cap of 200, 300, 400, 500 million Swedish kronor, you have a huge dilution because the money will control who is going to open and to run the mine. So you have financial risk that is very important to assess as well. You have political and environmental risk. To be able to open a mine, you need a permit, at least in the Scandinavian countries, and I think it will be more or less the same in the rest of the world. What are the chances of the risk in this area? And then finally, you have the risk on the management. Are the people able to open and run a mine or not? Do they have the skills? Do they have enough geologists, underground mining engineers? Do they have good contacts with the suppliers? That should also be assessed when you're looking to a junior investment in a junior company. So, I do agree. This is high risk, high reward, but it's extremely fun because it's quite easy to build up this know-how as an investor. Because all companies, they give information on the internet. You have a lot of reports, a lot of know-how that could be found. So for the investor who is willing to spend some time in this area, they could be quite heavily rewarded. So at the end, this would be my portfolio advice. I'm quite happy that it's not so far away from other suggestions this evening. I would go for 45% in bonds. I would go for 45% in shares and try to diversify this so they're not linked together. I would go for 5% physical gold or physical gold related papers. I still trust the banks, and I don't know where to put the physical gold, maybe in the mattress, but then my wife is still around. And then up to 5% in gold related shares. But I will certainly not do as I have done, that I put all my assets into one company, and that's Gex Gold. But that's my personal investment portfolio. So this is the true stuff. This is gold on our shaking table in Bindal in Norway. We have so far produced a few kilos on the test mining operation. It's not that bad. We have been mining out some close to 6,000 ton. Average grade is, depending on which vein we're mining, is between 4 and 5.6 grams per ton. It's not that bad. We're doing that on the, well, let's say, full width, even if it's a narrow vein that we're following. But on a 5.5 meter width, where we can use, well, let's say, normal scale equipment, we still have these grades. And that is encouraging us. Right now we're drilling in Bindal to see if the structure is down on the depth. We have published 1 drill hole with good intersections, and we're drilling 3 more. And we're right now at the end of hole number 4. And this is the shaking table, what it looks like. But it's quite fun to be able to produce your own gold, even if it's just a few kilos. Thank you.
Do we have any questions for you, Fangel, from the audience? I have a few questions that we talked about. I did an interview with you for Guldbladet, and you were talking a little bit about how can you as a Nordic country actually compete with low producing cost countries like China?
Well, bigger machines. It's quite easy. No, but I think that LKAB, Boliden, have shown that even if you're, let's say, high-cost country as Sweden, it's absolutely possible to be able to run mines and make good money.
just like with Volvo, right?
Well, but I think the Volvo is owned by, at least the brand for Volvo cars is owned by a small American company called Ford, I guess. But I think it's quite possible, and I think also that one reason, well, let's say why the production cost is going up, because energy is costing the same all over the world. And labor cost is going up in China. And well, as the economic boom is moving up, the cost for, well, to produce 1 ounce of gold or 1 ton of iron ore will rise, which means that, let's say, the possibility that the collapse of the, let's say, raw material prices is not that present. So I don't think you will ever see, let's say, gold price under 500, because so many mines will shut down.
I have one question also, and I would love to go back to that price value curve.
It's a cost.
Cost. And I was thinking that if to believe Professor Petrov and that the commodity price rally is not yet finished, what will happen in gold production? You have the information. What will happen in gold production in numbers? Will it be doubled? Is it possible to double it? And what will happen to the gold world market price? What effect will it have if the production really doubles because of the gold price increasing?
Well, you can only speculate what will happen in the future. It's very difficult to do that. And I think that the production cost will rise. So if you say you double the gold price, I think that the average cash cost will reach maybe $1,000, something like that. But it will have the effect that, well, let's say, if the minimum for open pit mine today is 1 gram per ton, it will drop down to 0.6, 0.5 maybe, which means that you have a lot of areas that have low grade gold, or even, let's say, waste rock from old mines that are put into play because now it's ore, so you can mine it economically. And so it's like, it's very difficult to see that we will run out of iron ore or gold. Like, I don't see that, even if it's told that we're running out of oil, I don't think that will happen. Well, at least as not fast as the experts say, because it's like being raised in Norway. There was a huge boom some 40 years ago when crazy people started to talk about oil exploration offshore. That was unheard of at that time, when the 1 barrel of oil was $8, $6, something like that. But today it's a huge business in the Nordic Sea, which means that it might be in the future that you're mining for gold very remote areas, we'll say underneath the ice of Greenland, in Arctic areas. So it's very difficult to see that, we'll see, you will run out of raw material. This is Magnus Field, and he's raising his hand for a question.
Jag vill fråga en liten annan sak när det gäller Norge och Sverige, Jon. Alltså, vi ser ju att en del företag som är aktiva i Sverige har sina listning i Oslo. Ni är aktiva i Norge och listade i Sverige. Vad är det för skillnad i investeraruppträdande i Norge och Sverige? Det verkar lite spännande, tycker jag.
Är det okej om jag svarar på svenska?
It's okay, but just in case if there's somebody who's not speaking Swedish, I would love for Ulrika to repeat your question and for you to answer in 2 languages.
Okay.
I'm not sure if I can do that, but I think you can maybe do that and answer as well.
Well, the question was that, well, Gexco being a Swedish company with operations in Norway, how come we're not listed in the, Oslo Stock Exchange, or listed in Norway? And what would be the difference from let's say how the financial market is working in Norway and the financial market is working in Sweden. And the last part is the one that is most easy to answer, that in Norway they have a tradition for investing in raw materials. They have been investing in oil for a long time. They're investing in energy, aluminum plants, well, let's say basic industry, also fishing or sea farming and different areas. So I believe that, well, let's say Norwegian investor community, they like raw materials and they have, let's say, a more relaxed more relaxed way to deal with risk. So several companies are listing in Oslo because they will have a better pricing of the company. For us, it's quite easy because we have a supplier, or let's say the stock market listing called NGM. And according to the new rules, if NGM is opening, well, let's say a stock market in Oslo, which they've been talking about for a while, we could quite easily list our own share also in Oslo. But then again, if we go into the, let's say, traditional stock market, the Oslo Børs in Norway, we will have, let's say, a new listing procedure that will cost us a lot of money. So we're looking into the possibility to have a dual listing or have a listing just only in Norway, as we look into different business possibilities all the time. So it's part of, let's say, what Mika and I are doing daytime. We're not always playing, let's say, poker on the internet.
Is there any more questions to Jon? Ulrika has one.
Yeah. Do you see any other factors behind the fact that Swedes are very bad at investing in commodities in general, except for that we're not used to investing in commodities?
I don't think Swedes are bad in investment in commodities or in, let's say, raw material related companies. But it's a little bit slightly difference between Stockholm and Oslo.
If no more questions, I would love to hear applause for Jon.